Hello, good afternoon. You're watching News 9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. In the studio with me is Suyash Maheshwari. Suyash, good afternoon.
Good afternoon, Shweta.
Let's quickly run our viewers through how markets performed this afternoon.
Certainly. So after a flat opening, markets also closed on a flattish note, but with a negative bias. So the market has snapped its two-day winning streak. Now at open, Nifty was up about 19,800 levels or so. The index has faced during the session resistance at around 18,850 levels, and we also saw it dipping towards that 19,780 sort of levels. However, the index did manage to recoup some of the losses in the last half an hour or so, but on a closing basis, the index has closed below the 19,800 mark. Now, Sensex also saw a slight correction of about 50-60 points, and the index closed just above the 66,400 mark. The broader market, Shweta, today outperformed both the headliners. Nifty Smallcap index was up about 0.65% in today's trade, whereas Nifty Midcap 100, Shweta, ended with gains of about 0.2%. We also continue to see a decline in volatility. India VIX today declined by about 3.34% and currently sits at about 10.62 mark. Now, among sectors, Shweta, we saw a correction across IT stocks. The IT pack, in fact, was the worst performer today. The index corrected by over about 1.67% or so. And most of the heavyweights saw a deep correction where led by Infosys, which was on 2.8%, TCS, which was on 1.85%, HCL Tech, which was on 1.78%. Now, among other sectors which were under pressure today was the Nifty PSU Bank. We have seen the kind of the rally that we saw in the initial few months of FY24 kind of fizzle out over the last few weeks. However, Nifty Bank maintained its bullish momentum. The index has gained about 1.6% or so in the last two sessions. In fact, it also closed above the 44,500 mark, inching towards that 44,600 mark on the daily charts. Now, another loser today was realty stocks. Nifty Realty, which is currently at a 15-year high or around the 15-year high, saw some profit booking taking place. The index was down about 0.18%. Auto stocks outperformed. The Nifty Auto pack was up about 0.8%. FMCG pack was muted. It was up about 0.21% or so, whereas media stocks saw some good buying action as the index ended about 3% higher in today's session.
All right, and since we are talking about IT, and the whole IT pack of course continues to be in the news for the entirety of this week, we're hoping our guest will join us very, very shortly. But let's quickly get a sense of the results that have been out so far and what is expected as far as Infosys's results is concerned. We're given to understand that they will be out any time now.
Yes, Infosys results are expected any time now. I mean, on a sequential basis, the expectation is that the performance will remain muted, and we'll see a marginal decline on a quarter-on-quarter basis, whereas profitability is expected to improve because there is no wage hike cycle, and the companies have also worked towards cost optimization.
All right, that is as far as Infosys is concerned. HCL Tech results are also expected.
HCL Tech's results are also expected, and I mean, the expectation is that we'll see a sharp recovery in both revenue and profitability, given that the company has presence in the cloud business more so than its competitors TCS and Infosys. So the expectation is that we'll see a sharp recovery, but the stock, Shweta, in the run up to the Q2 results has corrected significantly. It is down about 3.5 or 4% in the last two sessions. It was down about 1.6% yesterday. In fact, today also it ended about 1.8% lower. So I mean, the street is not very bullish on the prospects of Q2 results of HCL Tech, it seems.
All right, and so far the sentiment is that many of these companies are going to miss their margins and revenues targets, and even if the volumes look very lucrative in terms of the deals that have been signed, there's not enough margin to go by. That of course is the big message that we have picked up from our experts, people we have been speaking to for the last 24 hours.
I mean, that is the broader trend, but as far as Q2 being a muted quarter, the expectation was there and it has been absorbed in the prices of the stock, as we have seen a fair bit of correction in the run up to the Q2 results. But Shweta, the focus, I think, this quarter especially will be on management commentary, especially in regards to the deal wins, because of course the companies have landed big deals in the previous quarter. We have seen Infosys landing deals to the tune of 5.5 billion, HCL landing that Verizon deal of about 2.1 billion dollars, TCS also adding deals of about 3.6 billion dollars. But the problem, Shweta, remains that all these deals are long duration deals, so the revenue realization will probably not occur in the next few quarters, and probably by the first or the second quarter of FY25 we'll see the effects of the big deal wins start trickling in.
All right, and since TCS results came out and we tried explaining to our viewers the big takeaways, let's also quickly run them through those takeaways.
Certainly, Shweta. So TCS on a it was a mixed bag quarter for the company. On a quarter on quarter basis, the revenue declined. Declined. Not declined, but came below the expectations of the street. Now the street was expecting revenue to increase by about 1.3% sequentially. However, revenue came at around 0.5% higher on a quarter on quarter basis. If you are talking about net profit, we have seen at least in terms of realizations, the profit exceeded the street expectations, and this was on the back of company optimizing its cost, streamlining its processes, and also we are not seeing any sort of hiring this quarter, so perhaps that was one of the reasons why profitability and margins improved. Okay, so TCS revenue, as you can see, was up about 0.52% on a quarter on quarter basis. Shweta, this was below the street's expectation, which was pegging it at 1.3% or so. Net profit, Shweta, improved significantly. The street was expecting around a 0.8% quarter on quarter improvement in the net profit figure. However, it came much ahead of the expectations and it improved by about 2.42% from 11,074 crore in Q1 of FY24 versus 11,342 crore in Q2 FY24. Now, operating margin, Shweta, we saw a good bump up there, 110 basis point bump up in the margins, but I was reading some commentary coming in from the brokerages this morning. They are, concerned about the revenue growth of TCS and other companies, and perhaps that's why we are seeing this correction take place in, IT stocks. Now,
okay, Avinash Gorakshakar has finally joined us. Avinash Gorakshakar, Director Research, Profitmart Securities. Avinash, good to have you. We understand you were juggling with some internet connection issues. Let's quickly run our viewers through what do we know so far, and Suyash has done the job of running us through the markets. Let's first take our viewers through markets. Markets, closed on a flattish note this afternoon. What are you making of the numbers and the commentary that is coming out from IT sector?
I think first of all, my apologies. I had a small internet issue, so that's the reason for the delay. First of all, as far as TCS numbers are concerned, I think the markets were not very much excited, largely because the performance was largely flat. If you look at the revenue, the operating EBITDA, only highlight of this quarter was basically the EBITDA margins, a slight improvement in the EBITDA margins, and definitely a reasonably good order book in terms of TCP. But I think clearly the market looked at the commentary, with a certain amount of negative, growth, considering the fact that the management was extremely cautious on growth coming in from the European markets, and most importantly, there was no growth kind of connotations to the overall tone of the commentary. So I think that's the reason the markets were not very much excited, even by the buyback, of almost 4,150 odd rupees, which was announced. The buyback has been pretty attractive. It's a large buyback of almost 17,000 odd crores. So I think, clearly now it looks as if the third quarter and the fourth quarter is also going to be extremely challenging. I would not be surprised that the markets would obviously be now looking at IT as a slightly, only as a value kind of proposition rather than a growth option. And that's the reason, despite such a good buyback and a very good dividend, the stock has not given this any kind of gain on the upside today. we believe that investors will have to wait for at least another 2 to 3 quarters before growth resumes again, because growth is more important than a sentimental booster like the buyback which has been announced as of now. So I think net, we'll probably see better, commentaries from Infosys and HCL Tech also today. My sense is that if this growth issue continues, then I think you're going to see IT sector underperforming for a reasonably long time going forward.
Now, Avinash, as we speak, Infosys numbers are also out. Actually, the profit figures has disappointed, and it seems it has come below the street's expectations. Whereas revenue, which was expected to be muted, was ahead of street expectations. In fact, it's about 2% ahead of the expectations. But reading at the numbers, the first draft of numbers, it seems that Infosys has cut its revenue guidance, at least the upper band of its revenue guidance. We saw that being a major overhang on the stock in the previous quarter, when it cut it down from 4 to 7% to 1 to 3.5%. I think they have cut it down to the upper band to 2.5% now. How much of an impact do you see, it being on the stock prices?
So I think this is a big negative surprise, because earlier in the previous quarter, as you rightly mentioned, when the revenue guidance was cut, the market took it quite negatively. And I think the same issue, if it is going to be repeated in the quarter going forward, then I think clearly it means that order wins are not getting converted, and execution is going to be a major issue. In fact, from the TCS commentary also, one thing was very valid, is that conversion into actual order implementation is now getting a very big challenge for Indian IT companies. So I think it's going to be negative for Infosys. My sense is that the market was not expecting this kind of negative surprise, and of course the profit number has been below expectations, but the commentary and the guidance which has been cut, I think definitely sounds that at least the next 1 or 2 quarters are going to be extremely challenging for Infosys.
Now, Shweta, let's just quickly look at the Infosys numbers here. Now, Infosys has, the revenue has gone up by about 6.72% on a year-on-year basis, whereas the expectation was, we'll see a 3% rise on a year-on-year basis. So, revenue figures have come in at just below the 39,000 crore mark at 38,994 crores in Q2 of FY24. We have also seen a good profit jump, on a year-on-year basis. On a year-on-year basis, it has actually beaten the street's expectations. The street was pegging the growth to be at about 2.2%. We are seeing a 3.17% rise, in profitability on a year-on-year basis. Also, the operating margins, although they have jumped, it seems that they are muted. The street was expecting a 50 basis point jump on a year-on-year basis or so, but we have only seen a 35 basis point jump. So not too bad, but good numbers as far as on a year-on-year comparison. So Avinash, what's your first initial reaction on the numbers? What's your big takeaway here?
No, I think, see, more than the numbers, if the commentary on the guidance is going to be negative, that is something which the market should be little wary and be concerned about. I think the markets obviously look at the future, and I think if the guidance has been cut, then I think it definitely is a not sign. And I think more importantly, I think order execution out of the current order book plus new orders back are now going to be critical variables. Plus, I don't know what has been the attrition number. The attrition has also been a kind of a major issue for most of the larger IT companies. So my sense is, I know it would be at best be a market performer. I wouldn't expect this performance to result into some sort of a significant amount of re-rating for the stock. So I think we have been telling our clients that at best to hold on to these stocks, but fresh buying at these levels, we have not, we don't advise, at least at current valuations.
Now, Avinash, also reading the brokerage commentary, it seems that, even though the companies have landed, large deals in the quarter gone by, but the revenue, because these are long duration contracts, is only expected to, trickle in and add to the growth of the company from starting from FY25. So, I mean, what are your thoughts on that? Do you agree with these brokerages? And on the back of it, will FY24 finally be a washout year for IT companies?
I think it looks like that the year that is FY24 will be a very challenging year. And in terms of earnings growth, which is a very crucial number which the market tracks, I think earnings growth could at best be flattish for most of the IT companies in FY24. And as you rightly said, most of these companies have got large order books, but most of these are going to get implemented, from FY25 onwards. So I think there's going to be a little bit of uncertainty on these orders. In case these orders get delayed or typically get executed at a later stage, then I think they are going to actually result in a slower earnings growth trajectory for these companies. So I think, it's going to be a little cautious road forward, considering the fact that these companies have always played on the buyback and the cash positions, of these companies. I think what the market looks is the earnings growth and the growth visibility. So unless these, metrics actually come back again in a strong way, most of the IT companies, including Infosys, TCS, are going to trade in a very narrow range, and there's unlikely to be any significant, re-rating in the near term.
Avinash, one final question on as far as Infosys goes. The commentary will start trickling in the next few hours. What will be some of the things that you'll be tracking from the Infosys, Q2 results?
I think outlook on margins. Secondly, what is the attrition levels? And third point would be, what kind of, execution of the current TCV orders which the company has got. And most importantly, do they continue to see significant headwinds in US and Europe? I think these would be the broader, kind of data points which I would be looking forward to. And obviously, in terms of, the revenue growth, any cutback in the dollar guidance would definitely be a negative surprise. So I would be looking at all these inputs, from the management side.
And Avinash, HCL Tech is another company that is expected to, announce it Q2 numbers, probably in the next few hours or so. But I want to talk about the stock price action. As far as a top 3 IT company go, the expectation on the street is that HCL Tech will outperform, at least as far as this quarter goes, both Infosys and TCS. But the stock has in fact been one of the worst performers. So what gives?
Yeah, I think broadly, HCL Tech has always traded at a discount to both TCS as well as Infosys. And I think in terms of numbers, broad street estimates point out that, this quarter could be slightly better in terms of margins, in terms of the revenue growth. But I think here again, the question is whether, the management is committed to deliver this, and where, they could probably sustain this growth in the next 1 or 2 quarters. Typically, the second half is supposed to be a much better quarter period for the companies in the IT space. And I think that is something which the markets would like to look at. See, more than the numbers, it's the commentary and the growth outlook which would be shared by the, management. And that is something which has been slightly, patchy for HCL Tech. So I think in terms of numbers, we don't, deny the fact that valuations are looking attractive. But again, whether these numbers could be sustained, any slowdown signals, signs, if have been highlighted by Infosys management, would obviously mean that the overall IT space is going to be challenging. It cannot happen that HCL Tech will grow and Infosys will not grow. So I think typically we'll have to see the, management tone of all these companies, and then take a call as to whether HCL Tech really qualifies as a buy. But currently, we have a hold on the stock.
So wait and watch mode as far as the IT pack goes.
Absolutely.
And all eyes will be on the management commentary.
And of course the guidance, but because for Infosys, upper end of the revenue growth guidance has been cut by 100 basis points. In fact, margin guidance is same. It's been maintained at similar rates. Avinash, what are you making of as far as the guidance from Infosys is concerned at this point in time? And what sort of commentary would you be expecting from both Infosys and HCL Tech? What will be the broad parameters, indicators you'll be looking and watching out for?
As I said, the broader number which will be very much important is the dollar guidance. Any cutback in the dollar guidance is definitely going to be negative for both Infosys and HCL Tech. Secondly, in terms of margins, I think TCS has shown a slight bump up in EBITDA margins. Whether margins are going to be sustained or whether there would be some downward pressure. And thirdly, on the attrition side, has attrition now stabilized? And most importantly, what's the kind of business outlook, from key customer regions like US and Europe? Because US has been growing very pretty well, but Europe has shown a stodgy kind of growth. So I think all these points will be important. I think once we get the management commentary out, these things would be very important to note whether the management is upbeat, positive, or slightly cautious. If they give a cautious commentary, then I think it clearly means that, the third and the fourth quarter is going to be equally challenging.
All right. And, since we're talking about attrition, we know, with the way TCS and its guidance and its commentary, attrition for the quarter gone by has come down lower, but the number of people, the headcount has also reduced, which substantially hints at a hiring freeze. And that hiring freeze will, of course, span out perhaps in a positive territory. The freeze may go away because there are deals that these companies have been signed, they're mega deals, and in order to live up to those deals and the expectations, more hiring in pipeline.
And
Avinash?
Avinash, given that these companies have landed these long duration multi-billion-dollar contracts, I
You
mean,
need more
you
people.
need more talent, you need to retain more people, you need to hire more people as well, right?
Do you think hiring is going to happen soon?
No, I think my guess is, hiring will have to happen because these are all long gestation projects. But I think clearly, as I mentioned to you, that attrition has also been a major issue for almost all the large IT companies. If they manage to control the attrition level, then I think they are well positioned. In fact, TCS, as you rightly mentioned, the attrition level has been maintained. But I think going forward, most of the other IT companies continue to face challenges. Key talent is still not available, and whatever is available over a period of time. So I think it's going to be a key challenge even on the management, on the manpower side, because in IT the major asset is the manpower, and obviously they need to have skilled manpower to ensure that long gestation projects and long duration projects are serviced within timelines given by the customer. So we'll have to wait and watch and see what the management commentary on this aspect is also.
All right, Avinash, thank you very much for taking time out. Thank you for joining us on this very crucial day. We, of course, keep tracking all the numbers here on News 9. Remember, the earnings season has kick-started with TCS, now Infosys, HCL Tech results also awaited very, very soon today. We will keep bringing all those numbers right here on News 9. Thank you for being with us this afternoon.